Australia's GDP numbers for the December quarter will be released later this morning by the Australian Bureau of Statistics. And already there's a warning. Joining me now is our business reporter, Edward Boyd. Ed, economic growth expected to be quite weak. There's a chance it could go backwards.
That's the chance here. That's the risk for Australia's economy in the fourth quarter of last year. You think back to that quarter, there was strong retail spending in November due to the bring forward of, the Black Friday sales and what have Cyber Monday. But apart from that, retail spending was pretty weak. We have just gone through the profit reporting season, which is for that period, that's last 6 months of the year. And there was a bit of a slowdown from quite a few companies. Profits weren't as good as expected, but they still held up reasonably well. Commodity prices during the quarter were pretty good, but they have fallen from the record highs they were a couple of years ago. But you look at overall at Australia's economy, it is in a bit of a slowdown phase. We've got the consensus estimate from Bloomberg we can put up, basically showing what the majority of Aussie economists expect. You can see there, quarterly growth is expected to be 0.2%. The annual growth rate's expected to come in at 1.5%. And just for context, 1.4% annual growth would be the lowest level since 2000 outside of the pandemic years. So we could be in for a tough quarter here coming up, Laura. Numbers obviously come out in just about 2 hours' time.
Okay, if growth is weaker than expected, Ed, then won't that encourage the RBA to cut rates sooner rather than later?
Well, that's what CBA's economist Gareth Aird has suggested in his prediction note yesterday. Basically, if economic growth comes in maybe at 1.3%, so it undershoots the expectation by a little bit, it's going to encourage the RBA to remove its tightening bias on the economy. That's how he's phrased it. In other words, we're expecting rates to fall in September, but if economic growth is pretty weak in the December quarter, we could see interest rates falling in June or perhaps even earlier, because the RBA is going to say, we've done enough. Consumer spending is cut back. The 13 interest rate rises have clearly been enough for our economy. We don't need any more. We actually need to start cutting rates to get some more demand back into the economy again. So that could be the silver lining today if the figures are weak.
Okay, we love silver linings. As you know, Ed, we'll speak to you soon.